Ladies and gentlemen, welcome back to the channel. Here in this video, we will be going over GME as well as AMC, really your meme stock category in general, because GME earnings are tomorrow, and that could bring about quite a rally in the stock. And we'll discuss it here in this video, how that could also affect AMC as well. Hit the like button, subscribe to the channel, and let me know what you think about this information down below in the comment section. So GME at the time of recording this video is up almost 12%. AMC at the time of recording this video is up about 1.2%. Now, if GME has good earnings, that is likely to some degree to rub off to AMC, but we are in totally different stratospheres with GME's business and AMC's business. Believe it or not, GME is doing much better, and you don't have that constant risk of dilution with GME like you do with AMC. Of course, could GME dilute shareholders? That is always going to be a possibility, but they don't need to. They don't have as much debt. They don't need to dilute shareholders like AMC does. So unfortunately, I think there's a little bit more opportunity right now in GME than AMC, and I'll go over why exactly that is and what the data looks like here in just a moment. But if we take a look at this article that came out 2 hours ago, it says, "Dear GME stock fans, mark your calendars for March 26th. GameStop stock is rising on Monday ahead of a catalyst on March 26th. That is tomorrow. GME reports earnings after the bell. The company is going to release its earnings reports after market close tomorrow. Investors are hoping the holiday quarter comes with strong earnings," and that is the expectation. It says, investors are hoping for positive earnings results from GME, considering its latest report will cover the holiday 2023 quarter. This has Wall Street expecting earnings per share of 29 cents alongside revenue of $2.05 billion. So they're expecting positive 29 cents of EPS. So let's consider for a moment GME comes out with 30 cents of EPS for the next 4 quarters. That would put the year's EPS for GME at about $1.20 per share. Divide the current share price of about $14.80 or so, divided by $1.20, that would put the PE multiple only at about 12.3. That's not cheap, but that's not super expensive either. Now, it depends on what earnings estimates are, and next quarter's earnings estimates are not as good as that, right? They're not expecting to keep this level of profitability going, but if they could, if the estimates started to rise based on tomorrow's earnings, you could indeed have a large positive effect on GME stock coming tomorrow. Now, there's other things that are equally as exciting as just, even the fundamental case starts to look appealing if GME can keep this profitability up. But when we take a look at the Ortex data, you will see that, you're definitely prone to a short squeeze here. Now, last quarter for GME, or well, not last quarter, but for Q4 2024, EPS was 16 cents, so they were profitable as well. This was 2 years ago for this same quarter. And for further perspective, its revenue during that period was $2.23 billion. So they're actually expecting less revenue now, but greater profitability. So that's not great. If revenue beats the upside, fantastic. But the profitability metric starting to look better and better for GME. Now, if we take a look at the Ortex data here today, let's start with hedge fund and institutional option activity in the stock. You have 7 orders totaling $966,000 with a positive order value of 55%. So decently positive for a stock like GME that typically does not get a lot of positive option orders from hedge funds and institutions. If you take a look at this week's option expiration, about 71% of the options held for this Friday's expiration are calls, 29% are puts. That's a very strong ratio. And it gets even better than that because GME is 23.15% sold short. Who knows what the actual number is, but this is the legal number. This is the number that I can show you here in these videos without any speculation. 23.15% short interest of free float. That's a very high number. You have $810.48 million currently sold short in the stock, but I think one of the most impressive points here on Ortex for GME is not the short interest. It's actually the days to cover. Days to cover went from about 10 now to almost 20. So days to cover is up 107% in the last 3 months. That means the volume has been very low in GME and the short position has been rising in GME. So what does that mean? Well, based on the average volume, it would take about 20 days for shorts to cover on short positions. Now, if volume comes back into the stock, it would take less than that. But that's just showing you if volume comes into the stock, you're likely to get a rally in the share price if you do indeed get the right catalyst, get the right news, and a short squeeze does actually start. It could get pretty extreme with 20 days to cover. You do have 61.87 million shares that are currently sold short, with cost to borrow fees currently around 3.5% here on the day today. You do have utilization of 82.56% as well, with a short score of 85.43 out of 100. So the data here on Ortex for GME is quite impressive. Let's take a look at AMC and see how things kind of compare. The biggest thing that I want to remind you is we are expecting dilution from AMC at any time. AMC could come out and whack the stock with dilution, and that's the biggest problem with AMC stock, and that's why AMC has not done as well as GME. It's the constant dilution that is put on the stock. Now, if GME does well and has good earnings, that likely does rub off to AMC. I'm not sure exactly how much so, but it should have a positive effect nonetheless. Taking a look at the option activity for this Friday's expiration, 68.5% open interest is calls, 31.5% open interest is put. So that's pretty comparable to GME. Interesting flow sentiment today from hedge funds and institutions is 100% positive. So positive order value of 100%. You have one trade totaling about $53,000. This is a January 16, 2026 $10 call. This is categorized as an unusual sweep. So there was somebody that went out to the 2026 options, the $10 call, and wanted to buy a ton of them at $72 a piece. So that's pretty interesting. Those unusual sweeps tend to be a little bit more impactful than block trades and other trades. Now, like GME, AMC short interest is also high. But again, there's not much of an incentive for shorts to cover on short positions because AMC's just going to have to dilute shareholders yet again. With that said, AMC has a lot more debt than GME does. AMC has a big debt wall coming due in 2026, and Wall Street just knows they're going to have to raise capital in some way, shape, or form to be able to pay that or to refinance debt, and that really depends how much the Fed starts to cut rates and if they're able to refinance their debt based on that. Because right now, it's just, you can't really refinance your debt right now. But AMC does have 14.27% short interest of free float, $153 million currently in short positions, days to cover sitting at 2.66. Just like GME, AMC's days to cover is up 146% in the last 3 months. It's a much lower number because the volume typically is higher in AMC, but definitely the days to cover has been rising quite a bit. You do have 37.5 million shares that are currently sold short, 54 million shares currently out on loan. Cost to borrow fees today around 3%, utilization of 69%, and a short score of about 70. So things do look pretty comparable here for AMC and GME. GME looks a little bit better, quite a lot better as far as the Ortex data. But again, I think there's going to be a sympathy move if GME has good or bad earnings. If the stock drops, if the stock rallies, you're likely to get a similar reaction in AMC. But again, there's just dilution coming for AMC at any time, and that is a problem for the stock, and that is the main thing that really keeps the stock down and doesn't allow the stock to rise. To the contrary, though, if AMC's management comes out and says, you know, we're not going to dilute shareholders for 3 or 6 months, they did this back in 2023 and the stock went up about 300%. It's game on if that happens. I thought that was already going to happen last earnings. It did not happen yet. So I am not too confident Adam Aron knows what he's doing as far as getting the share price up to eventually raise capital, pay off debt. I'm not convinced in Adam Aron anymore that he just flat out knows what he's doing. Sentiment today for AMC on StockTwits is bullish at 65. Yesterday was neutral at 50, so that is good. Message volume today is 46. Yesterday was 34, so that's also good. And the participation ratio is sitting at 55. Now, GME is one of the most talked about stocks here on StockTwits today from retail investors. And you do have sentiment that is extremely bullish at 84 today. You're neutral yesterday, so today's a big jump in positive sentiment. Message volume yesterday was extremely high at 78. Well, today it's extremely high at 78. Yesterday was low at 36, and the participation ratio is one of the highest I can find right now at 60. So there's a lot of people talking about GME, lots of different accounts talking about GME that typically do not, and that suggests there's even more prospective buyers heading into the stock. And again, the stock is not that expensive on a fundamental basis if they can continue to keep this level of profitability. So I think it even looks pretty attractive from that metric. Now, like I said before, the options are pricing in about 27% for GME earnings, up or down. So there's expected to be quite a large move. I've noticed in this marketplace that you do typically see the move that is priced in actually happen. So whether that is, 10%, 5%, 20%, whatever the market makers price in, that's typically what ends up happening. That's the kind of move that we typically get on earnings. So keep that in mind. You're probably going to get quite a large move. AMC, to the contrary, is pricing in like 5% by the end of this week. So if you did want to trade options around GME earnings and you think there's going to be a sympathy move, maybe AMC options would be a better kind of risk to reward to do so for that. Now, keep in mind for this week, we do have economic data coming out on Friday, but markets are closed. I did not realize that in the last video. Tomorrow, we're going to have some data coming out. That is durable goods orders month over month, expecting positive 1.1%. Last month was negative 6.1%. So if you're negative 6% last month, you're positive 1% the next month. That's still not a good number. If you come in negative, if you have a really bad number again, then that just really shows maybe the economy is slowing down a lot more than we previously thought. That could start to be a negative thing for the markets, but we'll have to wait and see. We also have S&P Case-Shiller home price year over year and month over month, CB consumer confidence, Richmond Fed data coming out, couple different things that will be coming out as well, but specifically for GME and AMC, it's all about GME earnings. Again, if GME can close above that 100-day moving average at $14.66 per share, that is going to be a great sign for their earnings coming out tomorrow. Oh my gosh. Volume currently at about 6.5 million, so higher than where it normally is for GME, but it's still not extremely high. The volume could be much higher, like back here. On November 29th, GME's volume was 61 million. Today, it's only 6 million. So volume could 10x from here, and that would be considered a high volume day. So you're not even close to that as of right now. So I like the stock a little bit more than AMC based on these metrics, but it's going to come down to what earnings are tomorrow and what the company really says about buying assets, buying equities, if they are truly trying to become more of a holding company now. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.